The electric vehicle takeoff and landing market is an innovative category, to be sure. Large cities worldwide are suffering from congestion on the roads, and people would love to take the option to go to the skies instead. However, many question marks remain. Will any of these eVTOL companies like ACHR Aviation and Joby gain approvals to fly these aircraft in crowded cities? Then, the more difficult task, can they offer these flights at low enough prices to generate consumer demand? Can they do this while generating sustainable profits? All of that remains to be seen. Nevertheless, many investors want an early piece of this opportunity and are considering these two stocks. I'll compare these two stocks across several critical categories and determine which one I think is the better stock to buy today, ACHR Aviation or Joby. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So when you have these types of innovative companies that are pre-revenue or pre any significant revenue, what you want to see is how much cash they have on the balance sheet to determine how much runway they've got. Do they have a lot of time ahead to hit milestones so that they can then raise additional investor capital? And the answer for both of these is yes, they have enough cash. Joby Aviation has $825 million in cash and short-term investments, while ACHR Aviation has $360 million in cash and short-term investment. This gives the companies time to hit milestones, and if they keep hitting milestones on schedule, investors would be willing to give them more money as long as they demonstrate solid progress. If they don't make solid progress, then investors will be more restrictive in giving them more money to manage and grow the business and hit milestones and invest in research and development, because investors will feel that they're not making enough progress with the money that they've been given already. Now, in recent news, ACHR Aviation finalized key terms with a contracting manufacturing relationship with Stellantis. Stellantis has contributed up to $400 million to help scale its midnight manufacturing aircraft, and they can get up to 650 aircraft annually. Now, that's a solid ramping schedule, and this relationship is a lower risk way for ACHR Aviation to increase supply of its aircraft. Now, it could have gone the other route and tried to keep manufacturing in-house. That would have made the business more risky. It's already so risky because it's so innovative. But since it's outsourcing manufacturing and it has a large partner, I think that's great news. It de-risks the business at least a little bit. Now, they also unveiled plans for a Los Angeles air taxi network, and these plans include ports at LAX, USC, Orange County, Santa Monica, Hollywood Burbank, Long Beach, and Van Nuys. And I will tell you that Los Angeles could desperately use air taxis. The traffic on the roads here in Los Angeles is absolutely awful, and going to the skies seems like an attractive option for many who want to avoid the crowded roads here in Los Angeles. And since the end of Q2, the company raised an additional $230 million of equity capital, which is not included in this number here. So that should be an addition to this $360 million number. And you'll see that when the company officially reports its Q3 numbers later this year. Joby is also ramping up production, but more slowly. Their third production prototype aircraft rolled off their pilot assembly line, and their second began flying. They expect to have 4 aircraft in active flight tests next quarter. They're still in the certification progress, and they're in the 4th stage of certification that is now more than 1/3 complete on the Joby side, with numerous test plans submitted and accepted during the quarter. Now, while they're doing this, they're also looking at new markets, and they applied for certification in Australia and signed an agreement. Now, for these companies to succeed, scale is going to be key. They need to be in several large cities with several aircraft in each city, because the costs of producing these craft are going to be high, and they need to have large enough scale so that they can offer these flights at low enough prices to generate a sustainable business model. If they only have one plane in Los Angeles and one in New York, it's not going to be enough to sustain the business. They need to be much larger than that in order to generate sustainable revenue and profitability. Now, looking at their cash flow from operations, we can determine how long they have with their existing capital. ACHR burned through $80 million in the most recent quarter, while Joby burned through $99 million. So if you look at the pace, ACHR at its current pace, if we were to add that $250 million, we'll have $600 million in cash. And at a rate of $80 million, they have about 7 quarters before they need to go back to investors and raise more capital. That's almost 2 years, and they can hit a lot of milestones between now and then that will make investors more interested in putting more money into its business. Joby, meanwhile, went through $99 million in the latest quarter, and they have $825 million already. And so that gives them about 8 quarters of runway. That's about 2 years. And again, that's plenty of runway for the company to hit milestones to be able to raise more investor capital. And don't be confused. These two companies are going to need a lot more investor capital before they can reach a sustainable level. So a lot more money needs to go into these businesses before they can start returning capital to shareholders. And when they do that, they are diluting shareholders. And I want to see which one is diluting shareholders more. Looking at this comparison, you see Joby Aviation went from around 300 or let's say 400 million shares outstanding up to 689 million shares outstanding. So from 400 to about 700, a 75% increase in shares outstanding. Meanwhile, ACHR Aviation went from about 100 million shares outstanding to 334 million shares outstanding, a more than tripling of average diluted shares outstanding. So ACHR Aviation is diluting shareholders much more significantly than Joby Aviation is. Thankfully, these two companies, they have zero long-term debt. Each of these companies, no debt on the balance sheet. They're choosing instead to raise capital by selling more equity, and that's diluting shareholders, but at least they're not adding debt. Now, when they hit a few more milestones and they demonstrate that this business is going to stick around longer term, then they can switch to raising money through debt because they can get more attractive financing rates. Right now, if they were to go out and try and borrow money, the interest rates they would have to pay would be so high that it's unattractive. But if they hit these milestones over the next 2 years and they secure more financing from investors, equity investors, and secure more orders for their craft and more approvals, then they can go to lenders and they can get more attractive financing deals. And finally, I wanted to compare their valuation. And the only valuation metric I could use is the forward price to sales ratio. And even this is highly uncertain because the forecasts for sales over the next 12 months, these are highly uncertain. These are going to be one-off events here and there, sales to the military or the Air Force, etc. These two still have a long way to go before they're generating the type of revenue they expect to generate at larger scale. Still, it just gives us an early look at valuation, and we see Joby Aviation much more expensive at a forward price to sales of 143. Well, ACHR Aviation is trading at a forward price to sales of 29. So with little more to go off of other than early evidence of milestones being hit and the market opportunity for each of these and their planned business models for how they plan to approach this market opportunity, if I had to pick between one of these two stocks today, I would pick ACHR Aviation. ACHR Aviation. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.